This is On The Charts with Nick Radge, your Australian stock market update, highlighting stocks on the move so that you can invest with confidence and success.
Information in this podcast is general advice only and does not take into account your personal situation. Please consider if it is appropriate to you and consult a licensed professional before making any investment decisions. The information provided is believed to be accurate at the time of recording.
Welcome to the On The Charts podcast, episode 198 for Thursday, 18th of May 2017. Well, US market volatility finally cracked last night. The main indices had their largest single-day slump for 9 months on mounting concerns about the longevity of the Trump presidency and therefore the sustainability of the pro-growth agenda that the market has hung its hat on for the last 7 months. The S&P 500 slid 1.8%, and the VIX, the volatility index, jumped the most since the Brexit vote. The largest falls occurred in the banking sector, which was down 4.5%, and the small cap Russell 2000 sunk 2.8%. Bank of America plunged 6%, and Goldman Sachs, one of the initial big winners after the Trump victory, slipped to a 6-month low, down 5%. If the current sentiment towards the Trump administration can't be reversed, it may well be the start of a larger decline, erasing gains seen since last November. Not many stocks were left unscathed last night. The higher beta FANG contingent were all pummeled. Amazon and Google fell 2.5% apiece. Facebook, Apple and Tesla all fell 3.5%. Australia was unable to escape the carnage even after falling significantly yesterday. If there was one positive to the day's trading today, it was the banks closed off their opening gap down. Even Westpac was some 4.5% lower on the open after going ex-dividend and closed well off its lows. We mentioned Certex going into a trading halt yesterday pending release of research results. Well, they came out. The latest study into metastatic colorectal cancer failed to achieve a survival benefit over the existing standard of care, and as a result, the shares were hammered, dropping 28% today. They were halted again at lunchtime pending a response from the company. And Fairfax Media has been in the spotlight in the last few weeks, and a new entrant has emerged overnight, taking a tilt at the media group. Private equity firm Hellman & Friedman has upped the ante, offering $1.25 per share versus the TPG offer that was recently raised to $1.20. Shares in Fairfax advanced 6.6% today, closing at $1.23. At the close, the broader market finished off the session's lows after a late afternoon run higher. The main indices finished 0.8% down, pretty well across the board. Let's take a look at a few stocks of interest. First up, Beach Petroleum, which is an oil and gas explorer and runs right across the development and production stages. The company has interests in around 300 exploration and production tenements, both locally and overseas. Brokers and analysts are firmly on the sell side, citing production in the western flank is winding down, infrastructure delays, expiry of gas contracts with an increase in price, and current trading levels are well above valuation. Technically, we also see some further downside in the near term, with the outside risks of an acceleration in the downtrend resuming after being in a pause mode since early 2016. The price action from the major lows in January 2016 has been a textbook bear market bounce, and the question we're now asking is whether or not the multi-year downtrend has started lower again, or is this bear market bounce going to be somewhat more elongated? Either is possible, but should the latter unfold, some great opportunities will be presented. Now, at this stage of the move, further weakness towards 57 cents is probable. Below that, a red flag, and the resumption of the major downtrend is probably taking shape. But if prices can start to slow in this region around that 57-cent level, then offer some upside traction, we may have enough evidence to suggest an ongoing bounce could be starting. And if so, look for prices to move higher towards $1.10, maybe even $1.25. But right here and right now, we actually need a lot more information. Next up is Nine Entertainment Group, which fell 4% today. But technically, this is within the realms of the current larger trend and should lead to a renewed buying opportunity. The company holds some of Australia's most trusted and coveted brand names spanning TV, lifestyle, entertainment and sport. Now, the government recently announced new media reforms, which overall should be a positive for broadcasters. The proposal is that broadcast licence fees will be replaced by a new spectrum-based fee and reducing gambling advertising. Also creating a tailwind of late is the potential for a cyclical low in the industry. Ratings have improved and the Stan service continues to hold itself against competition. Technically, we looked at Nine Entertainment in previous episodes, specifically when the stock broke out from a large basing pattern back at around $1.10. Since then, we've seen prices rise about 30%, and now a pause is taking shape. Usually, we expect some kind of posturing below the recent highs over the coming weeks, and perhaps a little more downside towards $1.20. But if prices can hold themselves together above that level, then we'd expect the trend to resume and potentially remain quite sustainable for the longer term. NEC is currently held within the small cap growth portfolio. To finish up, we're on day 4 of our special Big Picture Week. So far, we've done long-term outlooks on the materials sector, banking sector, and also the All Ordinaries. Tonight, Scott Goddard is reviewing the FTSE 100 and the Aussie dollar. So join us for very long-term analysis of Australian and global markets to help position yourself for opportunities in the year ahead. My name's Nick Radge, and I look forward to seeing you on the charts tomorrow.
On the Charts with Nick Radge, brought to you by The Chartist. Join Nick and the team at Noosapalooza Trading and Investment Conference, 20th and 21st of July in beautiful Noosa, Queensland. Visit thechartist.com.au and click on Noosapalooza in the menu for details.